News 8 at Sunrise in high definition continues.
Welcome back. CPA Jamie Block is back with us this morning. Jamie, good to see you.
Thanks, Mark, for having me back again.
So this morning we're talking about long-term care disability insurance. I'm wondering why this is something that you and other CPAs are recommending for folks.
Yeah, unlike some other insurances like car insurance and homeowners insurance that are required by law, long-term disability insurance is actually voluntary. And an interesting statistic from the Center of Disability Awareness states that 1 in 4 individuals that are age 20 will become disabled at some point before they retire.
That's a major number. I mean, that's kind of jumps out and gets your attention there. Now, New York State offers short-term disability insurance, but in that scenario, there's an issue in terms of the length that it's being offered for and just how much money you can get as a result of it, right?
Absolutely, that's correct. New York State's policy is available for 26 weeks, which isn't a whole lot of time, and it's actually 50% of an individual's average weekly wages, capped at $170.
All right, so let's do the math here a little bit. If you make more than $8.50 an hour for a 40-hour work week, which most folks do, you're capped at $170.
That's absolutely correct.
Okay, and that, like you said, for most families, that's just not going to cut it.
Yeah, and that's why they need to have some kind of other funds available to live on, and long-term disability would cover that gap, and that's why it's very important.
Let's break down some of the long-term numbers. It's offered for more money and for a greater period of time as well, correct?
That's correct. So long-term disability policies typically pay up to 60% of the worker's wages and don't have a cap at the $170 like New York does. And it's also very important because it lasts up until age 65 or whatever your policy is. And New York State's limited to 26 weeks. And again, if you're disabled and have something that is not going to heal or get better, that's money that you're going to have to come up with somehow.
Another consideration is wait periods with these policies. Talk about that.
Yeah, wait period is the amount of time that you actually have to wait before any benefits are paid to you. So, for example, New York State's policy is 7 weeks, and then the benefits are paid. Most long-term disability policies have a 30 to 60-day wait period. And during that time, no benefits are paid, but after then, they pay. And it's very important for individuals to have some kind of emergency savings to pay and fund those expenses during that time frame.
Besides that wait period, what other terms should we be thinking about in terms of pricing for these?
Yeah, one thing that's very important is the type of capacity that the policy pays under. So, for example, if there's a surgeon who has a long-term disability policy and becomes disabled, if he can no longer perform surgeries but can teach under an own occupation policy, the benefits will still continue to pay, even though he's still able to teach, but he can't perform surgeries. Now, if he has an any occupation type policy, then the benefits will be suspended because they can teach and it's at their level of education and experience.
Important distinction. All right, we will leave it there this morning. Jamie, thank you.
Thank you.
Good conversation on this subject. More on the New York State Society of CPAs website as well. You'll find that link on our site at rochesterfirst.com.